Watch closely. When the Florida House proposed sweeping property tax reforms in 2025, the shockwaves reached far beyond Tallahassee. It threatened to rewrite the balance of power in real estate. That very same week, data confirmed something few expected. Florida's home listings finally began falling after more than 2 years of uninterrupted growth. The contrast between tax policy and market behavior reveals your next moment of advantage. By the time this story ends, you'll see why these shifts matter, how they alter value, and where your move should be. Florida's leadership, under Governor DeSantis and Speaker Perez, launched a bold set of constitutional amendment proposals aimed at easing the tax burden on homesteaded properties while preserving funding for schools and public safety. Among them, H.J.R. 205 would exempt homeowners aged 65 and older from paying non-school property taxes, a change that could flip incentives for both residents and investors. Other proposals would gradually phase out non-school taxes entirely or increase homestead exemptions year by year. These are not minor tweaks. They are foundational changes in the rules of valuation. As those plans surfaced, market watchers pointed to a deeper trend. The supply flood is receding. Altos Research's Mike Simonson says Florida had broken a streak of rising inventory that lasted 110 weeks. The state is now seeing fewer new listings, more delistings, and rising hesitation among sellers. That means opportunities that once seemed broad are now narrowing. Consider South Florida. Cities like Hialeah now rank among America's most house-poor homeowners, spending deeply beyond 28% of their income on housing costs. In metro areas like Miami, Fort Lauderdale, and Pompano Beach, cost burdens squeeze middle classes, trap households, and cut discretionary spending. Behind the glamour, a crisis simmers. In Kissimmee, the Magic Development saga stands as a warning. Developers promised luxury, branding, spectacle. They collected $87 million in deposits. Yet 6 years later, only 18 units were delivered. The rest remains aspirational rubble. That disconnect between promise and execution sends a signal. Not all that glitters is ground truth. Meanwhile, innovation tries to answer supply problems. In Tampa, a robotic 3D printed home is underway, printing walls layer by layer for a one-story, 1,450-square-foot house. This infill experiment hints at what housing construction could become: faster, cheaper, less dependent on labor and material scarcity. Together, these threads, tax reform, shrinking inventory, broken promises, and new construction tech, weave a map of hidden value. The era when speculators quietly grabbed parcels is quietly fading. Now, advantage lies with those who see structural signals first. When rules shift, when tax policies favor resident stability over speculative leverage, some speculative holdings will recalibrate. Homes bought as investment bets may become unsustainable. Some investors will exit. That creates supply for serious owners. Copious inventory and wild bidding might fade. The playing field tilts. Imagine watching a market in overdrive. Then the governor raises a flag. Suddenly, marginal buyers hesitate. Marginal sellers pause. Marginal speculators flee. The window for meaningful entry opens, but only briefly. When listings shrink, financing tightens, and tech accelerates, advantage belongs to the early. Florida's proposed tax reform isn't mere court theater. Amendments must pass voter approval. Legal language matters. Local budgets must balance. Yet already, markets are shifting in anticipation. Momentum is building. The financial downside for local governments is real. Counties rely heavily on non-school tax revenue for roads, emergency services, parks, and city services. If that stream shrinks, they may be forced to cut or find new revenue sources. House Joint Resolution 211, one draft amendment, would allow homeowners to transfer full Save Our Homes benefit portability, meaning the accumulated tax advantage when you buy a new homestead wouldn't be limited by value. Another proposal, H.J.R. 207, would create an exemption equal to 25% of assessed value. Combined, these shifts pressure county balance sheets. Critics warn, sweeping reductions could hollow municipal budgets. Florida Association of Counties and local leaders have expressed concern that cutting non-school taxes will hurt essential infrastructure. The tension is real. You can't both slash taxes and maintain roads, schools, public safety without new funding models. Even as tax debates rage, Florida's housing data starts telling a parallel story. According to House Canary, in mid-2025, the median closed home price in Florida slipped slightly year over year, about minus 0.55%. Inventory had swelled to over 127,000 units, and median days on market rose to 74. Buyers gained more leverage than they've had in years. Sellers began offering concessions, and price cuts showed up more frequently. The momentum that once pushed prices ever upward is softening. Realtor associations confirm the trend. Sellers are adjusting expectations, offering incentives, and repositioning as buyers regain leverage. The era of easy runs is giving way to nuanced competition. Florida's inventory reversal is particularly striking because it unspools after over 2 years of continuous climbs. That sustained ascent was almost without interruption, and now to see it drop signals a shifting supply-demand dynamic. Simonson notes that some of the decline is seasonal, but other parts reflect structural withdrawal, fewer new listings, more delistings, and sellers waiting for consensus direction. Underneath all this is a deeper affordability stress. Florida's Home Matters report shows millions of households are cost-burdened, spending more than 30% of income on housing, with many in severe distress paying over 50%. Renters are especially squeezed. Nearly 904,000 renter households below 60% of area median income pay more than 40% of income on rent. These burdens constrain demand and crowd out eligible buyer pools. Now layer climate risk and insurance pressure over the mix. Florida is a frontline state for sea level rise, flood risk, and increasing storm frequency. Insurance premiums have surged dramatically, making ownership more expensive even if mortgage rates fall. Combine that with additional tax burdens, and the effective cost of ownership becomes much steeper, even in places where you expect growth. Broker and loan officer voices now echo policy analysis. Elizabeth Cassidy of Edge Home Finance argues that phasing out non-school taxes for homesteads could come with increased tax burdens on investment properties. That shift could deter speculative buyers and reorient Florida back toward occupancy and community-driven growth. She warns, though, that complex issues like community development district assessments must be addressed, or development costs may balloon. Let's now walk through what someone with capital should watch for. 1. Track delisting and new listing trends. When sellers withdraw listings en masse, that signals hesitation. Inventory contraction becomes real. 2. Watch amendments passing legislature and language changes. As bills like HJR 205, 207, 211, and others proceed, early movers can position. 3. Monitor markets under strain. High-cost burden cities, regions with insurance stress, coastal zones at climate risk. Those may flip from high growth to high volatility. 4. Hunt for undervalued infill or redevelopable parcels as speculative capital reevaluates risk. 5. Explore technology plays like 3D printed housing that lower cost structure. Early proof projects may lead to scalable models. One crucial change is how returns will be structured. No longer can you rely purely on leveraged appreciation. Returns will increasingly come from structural arbitrage buying inefficiency, repositioning tax incentives, and writing the narrative. Simply put, value is no longer where everyone is, but hidden where rules are changing. When you internalize this map, you see Florida not as a monolithic sun state, but as a grid of micro-markets. Some will struggle under strain. Others' unexpected corridors may turn high value. Kissimmee, once overpromised, may see revival if reform enables ownership confidence. Tampa infill zones with 3D potential offer upside. South Florida neighborhoods with cost stress may become reversal zones. This transition is quiet but powerful. It's not an earthquake, but a gradual tectonic shift beneath the pavement. Investors slow, locals gain footing, supply narrows, tax leverage changes. When most eyes are watching price headlines, your edge will be in policy curves. If you see this before others, you don't follow opportunity, you lead it.